Let's work through a break-even analysis example problem. So this problem says Norris Company is trying to determine their break-even point for the month. The company will sell 1,000 units of their product this month for $50 per unit. Operating costs are as follows. So they have salaries, maintenance, depreciation, and utility costs that are all per month costs. And then sales commissions and delivery fees are both per unit costs. And it's important that we make the distinction between those two different types of costs. The per month costs will be fixed costs. Per unit, those are your variable costs. So we need to be able to calculate the break-even point in both units and in dollars based off of this information. So we're going to fill out a CVP income statement. So we have our sales minus variable costs equal contribution margin minus fixed costs equals net income. So we'll put the information that we know right now. We know that we are selling each unit for $50 per unit, right? So our per unit sales, that's where we get our 50. Per unit variable costs, how do we get that 14? Well, your sales commissions were $8 per unit and delivery fees were $6 per unit. So you add those two together and you get your 14. Now our total fixed costs of $6,300. We get that by adding up all of our per month costs. The $3,000 in salaries, the $1,500 in maintenance costs, $1,000 for depreciation, and $800 for utilities. All those added up gets us that $6,300. Now we can figure out our total sales amount. We're selling 1,000 units for $50 per unit. You multiply 1,000 times 50 and you get 50,000. Total variable costs, it's $14 per unit. We're selling 1,000 of them. So 1,000 times 14 is 14,000. Now our total contribution margin, we take sales minus variable. So 50,000 minus 14,000 gets us that 36,000. And then we can find our net income by subtracting out our fixed costs from our contribution margin. Now a few other pieces that we're going to need for our break-even calculations. Our contribution margin per unit. We get that 36 by taking 50 minus 14. And then our ratio column. Well, these ratios are going to be based off of sales. So sales is 100% of itself. Now variable costs, we take our variable cost number divided by our sales number. 14 divided by 50, or 14,000 divided by 50,000, and we'll get 28%. So variable costs are 28% of our sales. Now contribution margin, we take our contribution margin divided by our sales amount, and we get 72%. Now again, another way that we could have found that 72 is by remembering that your sales minus your variable costs equals contribution margin. So 100 minus 28 equals 72 as well. So now that we have all of that information, now we can start calculating our break-even point. So your break-even point in units. This is how many units do you need to sell to break even, right? To cover all of your costs. So we take our fixed costs divided by our contribution margin per unit. So that's 6,300 divided by 36, and our break-even point in units is 175 units. So we need to sell 175 units to break even, to cover all of our costs. Now, you might want to be able to calculate your break-even point in dollars. So that's how much in sales dollars do you need to make to break even. So you'll take your fixed costs divided by your contribution margin ratio. So again, 6,300 but this time divided by 0.72, right? 72% as a decimal gives us that 0.72. So you need to have $8,750 in sales in order to break even. Now there's another way that we could have calculated our break-even point in dollars. So your break-even point is a specific point, right? Your break-even point in units and in dollars, they're connected. So you can see this equation here that your break-even point in dollars equals your break-even point in units times your selling price. So if we sold 175 units for $50 a piece, that's $8,750 as your break-even point in dollars. Same sort of thing can be done if you're looking for your break-even point in units. You take your break-even point in dollars and divide it by your selling price. So 8,750 divided by 50, and we get a break-even point in units of 175 units.